Welcome back to the EXP's Express Notes. We looked at gross income and we looked at the definition of gross income. With the definition of gross income, we have what we love to call special inclusions. And the definition of gross income follows on and reads, but including, without in any way limiting the scope of this definition, amounts so received or accrued as are described here under, and these are followed by inclusions listed in paragraph A to paragraph N of section 1. Paragraph A looks at annuities, and ITC 761 outlines the main characteristics of annuities as being: it provides for an annual fixed payment, it is repetitive, it is chargeable against some person. Paragraph B is alimony or maintenance. The amount is included in gross income of the paying spouse where the order of agreement is after the 21st of March 1962, and the amount is exempt in the hands of the receiving spouse in terms of section 10(1)(u). Services rendered. Any services rendered will fall under paragraph C of the definition of gross income. Includes in gross income any amount received by or accrued to in respect of services rendered or employment or the holding of an office. By the holding of an office, I mean any directorships or managerial posts held. Two income tax cases there: De Villiers versus CIR and Stevens versus CSARS. Restraint of trade, a new inclusion. When I talk about new, it doesn't mean it's a year old or a couple of months old. Anything below 10 years old is new, because you've got an Income Tax Act of 1962. So a new inclusion would be a restraint of trade payments. Although they capital in nature, they are included by paragraph CA of section 1 if they are received by a natural person, a labor broker, or an entity which is or was a personal service provider. Compensation for loss of office. Paragraph D includes any amount, including a voluntary award received or accrued in the year of assessment in respect of the relinquishment, termination, loss, repudiation, cancellation, or variation of an office or employment in gross income. Pension, provident, and retirement annuity funds are included by paragraph E, EA, and F of the definition. Lease premiums. Paragraph G. The term lease premium was defined in CIR versus Butcher Brothers as a consideration having an ascertainable money value passing from the lessee to the lessor, whether in cash or otherwise, distinct from and in addition to rent. Know-how payments. Paragraph GA includes any amount received from another person in the year of assessment as consideration for the imparting of or undertaking to impart any scientific, technical, industrial, or commercial knowledge or information, or for the rendering of or the undertaking to render any assistance in connection with the application of such knowledge. So if you want to pass on any technical or scientific knowledge and you get paid for this, it will be part of your gross income. Leasehold improvements. If a lessee improves leasehold property, the amount by which the property has been improved will be included in the gross income of the lessor as the value of the improvements as stipulated in the agreement, or if there's no amount stipulated, an amount representing the fair and reasonable value of the improvements. Fringe benefits. The gross income of a taxpayer includes the cash equivalent of any benefit or advantage granted in respect of employment or the holding of an office, as defined in the 7th Schedule of the Act, and any amounts required to be included under Section 8A. By this I mean your lovely car allowances, your low interest loans, housing allowances. Yes, those are fringe benefits. And these only applies to employees and office holders, and by office holders this includes directors. So if you are a director and you are driving around a Porsche paid for by your company, there is a specific value that will be included in your gross income as a fringe benefit. We will expand on that when we get to the section on fringe benefits. Any proceeds from the disposal of certain assets, any amount received by or accrued to the taxpayer from the disposal of an asset that was manufactured, produced, constructed, or assembled by him that is similar to any other asset manufactured, produced, constructed, or assembled by him for the purpose of manufacture, sale, or exchange. This was also added in. They're looking at people like Toyota and Volkswagen and people like that. So if you give your director a Lexus to use for 2 months and then decide to sell the Lexus, the amount that you sell the Lexus for will be included in your gross income. That is all paragraph JA is trying to say. Dividends, paragraph K. Dividends are amounts of a revenue nature, being the fruit of capital employed, and the capital is the share, and all dividends are included in gross income. Subsidies and grants, any grants, subsidies in respect of soil erosion or any development expenditure in respect of the 1st schedule. So we literally looking at farmers and farming and things like that here. Any amounts received by or accrued to Section 11E sporting bodies, that is a non-profit company or an association of persons incorporated, formed, or established in the Republic for the purpose of carrying on sporting activities, that any amounts received by them will be included, although they will be excluded later on. But remember, everything is included in gross income, even if it's exempt. Keyman policies, this was deleted in 2010, and this is the last year where this inclusion will be active. When a policy matures, the amount that is received will be included in the employer's gross income if the premiums were deductible in terms of Section 11W. And a Keyman policy is when you have this brilliant scientist on your staff and you decide that if you lose this scientist, half your business would be gone. So you insure the life of this scientist. That's what a Keyman is, and that's what a Keyman policy is. Any recoupments, if you sell an asset that previously got a tax deduction, the amount for which you get the tax deduction will be referred to as a recoupment, and your recoupment will be included in gross income. And that is paragraph N of Section 1 of the Income Tax Act. Please remember, one point of view, you will include in gross income everything, including any future exemptions. Thank you. Bye.